2022, a tumultuous year for the technology sector. Tech companies from Amazon to Twitter eliminated thousands of jobs. Hello, I'm Arnold Knight, and this is The Heat. For more than 2 decades, the tech industry was a reliable source for valuable stocks and high-paying jobs. But in 2022, all that changed. In November, US companies Amazon and Meta laid off more than 21,000 workers. Twitter's new owner, billionaire Elon Musk, cut 3,700 employees, half of the workforce, citing the company was losing $4 million a day. Worldwide, some 138,000 jobs were cut in the industry, according to the website layoffs.fyi. The layoffs have impacted every tech sector, from semi-autonomous vehicles to social media. One US analyst says job losses in the tech industry could be just the beginning.
Big tech's been tough on up to this point. Clearly going to see significant cost cutting, headcount cuts, I think, over the next 6-9 months, as the recession's now on the doorstep. Now, I think as this dark storm eventually will pass, but you do not look at these tech companies as isolated. I think there'll be a massive ripple effect.
Well, for more on the turmoil in the tech industry, let's bring in our guests. Joining us from Nashville, Tennessee, Joshua White is an assistant professor of finance at Vanderbilt University. Also with us from New York is Anthony Chan. He's the former chief economist with JP Morgan Chase. From New Jersey, Scott Schober is a cyber expert and the president and CEO of Berkeley Varitronics Systems. And from California, Liz Miller is vice president and principal analyst at Constellation Research, a Silicon Valley analyst firm. Thank you, everyone, for being with us. Liz Miller, let's start right there in Silicon Valley, the epicenter of the U.S. tech industry. As I was reporting, 138,000 people worldwide laid off. In the United States, according to U.S. media, 89,000 tech workers have been laid off, and that includes in these tech giants like Facebook and Instagram. Now, if you look at Silicon Valley, what's the environment there like? How is the current environment impacting Silicon Valley?
It's a great question. And I think it's very confusing, if I'm going to be very honest with you, because while we've seen these layoffs, we're starting to see other firms begin to adjust their workforces and perhaps get rid of some of the bloat that they may have been experiencing, even as divisions shut down. So, for example, Amazon shutting down certain divisions have led to certain layoffs. We're seeing these layoffs occur, but we're also dealing with a massive talent shortage. There are lots of jobs that are still up there that we have been looking for quite some time. We're starting to see that some people through the pandemic actually did not return back to the workforce. They may have thought maybe that weekend in the yurt turned into a year or so. We're also continuing to see the strength of the gig economy. So in the Silicon Valley, we're having this push and pull. We're starting to see workers who are really being quite selective in where they want to take their talent. We're starting to see organizations get very specific about the talent they want to bring in to their organizations, especially in areas like data and analytics. And we're starting to see a lot of workers really take stock of how they want to work and what work style they want to enter into.
And Liz, as you point out, they are now cutting the fat, but what are business leaders in Silicon Valley saying about growth?
Growth is definitely on the agenda, to be very honest with you. In fact, Constellation Research has recently completed a survey where we went out and asked leaders, how do you feel about the year to come? The year to come, actually, they're a bit nervous. They're not quite sure what we can start to expect. So they don't believe that financially they're going to be doing as well through 2023 as they did in 2022. They're starting to wonder if there is going to be some type of inflation ripple that begins to turn into recession. But they also are starting to spend more, and they're also continuing to hire. So there's a little bit of a mixed signal, to be very honest with you. So what leaders are saying is they really need to be staffing for growth, and that is really about moving resources around so that you're in more growth-centric positions, and that those positions are really fueled with the people who really understand data, they understand the product, they understand the infrastructure of what growth looks like, and how we can actually automate some of those processes that really do lead to growth.
Anthony Chan, the CEO of Meta, Mark Zuckerberg, he attributes the downturn to the wider economic downturn that we are seeing, and also to a reduction in ad sales. Of course, Facebook has also seen a number of workers being laid off. But if we look at the United States specifically, does all this point to a recession?
I think that right now, all the signals are, in fact, pointing towards a recession. That's why it's become the consensus. That's always very dangerous when something is a consensus, because the rule of thumb is that if something is consensus, it probably won't happen. But the signals are certainly pointing in that direction. I actually have my own proprietary indicator that looks at the index of leading economic indicators when it drops 3 consecutive months. And the yield curve, the difference between the 10-year and the 2-year. When both of those indicators drop for 3 consecutive months, you've never had a period in U.S. history where you have not had a recession. And right now, that index of leading economic indicators has dropped 8 consecutive months. And of course, we've had close to 4 months of that negative inversion in the yield curve. So yes, everything is pointing towards a recession right now, and we probably will, at the very least, get a slowdown in economic growth in 2023. And that's what I think these tech companies are, in fact, preparing for in the wake of very high interest rates, which are never friendly to growth companies, and technology companies are, by definition, growth companies.
Josh White, what in your view is driving this downturn? In some respects, is it a self-correction, actually? You know, we've had years of cheap money, but that era has come to an end.
Yeah, just following up on what Anthony said, we had years, almost a decade of near zero interest rates. And so investors poured capital into tech companies, and they achieved really high valuations, both publicly and privately. And then as the Fed has tried to fight off inflation, which, you know, we've gotten past the conversations of it being transitory, we sort of had almost unprecedented rate hikes. We've had 400 basis points or 4% in a year, and I think the expectations are there for another 50 basis points in the December meeting. And so those rapid interest rate increases are really impactful to the tech industry for the reasons that both Liz and Anthony said. You know, tech companies, when you pursue these aggressive growth strategies, those projects often take many years to pay off. Interest rates make those future cash flows that arrive 10, 15 years out into the future worth less in sort of today's terms. So I think the Federal Reserve has had an enormous impact by trying to fight inflation. They've simultaneously given tech companies the opportunity maybe to right-size some of their employee base.
And Josh, as Anthony said, his modeling is showing that we are heading for a recession. Lots more pain ahead?
Yeah, that's the trillion-dollar question, right? And in fact, some of this, you know, depends on how much of this is coming from the Fed versus the demand side on the consumer. I think the holiday season will give us some insight into that. But it can be a double-edged sword. If demand is too strong, then the Fed's going to see that as being continued inflation. There might be further tightening of interest rates, and then we would likely see it start to spill over, as Anthony and as Dan Ives predicted from Wedbush. If we see more of maybe you know, similar customer spending and demand during the holiday season, I think there's still a small chance we could see a softer landing for 2023. But as Anthony mentioned, the yield curve is inverted. So investors are expecting that at some point beyond 2 years, the Federal Reserve will need to lower interest rates to sort of boost the economy again.
Scott, let's look at some of the specifics here. Of course, one of the marquee brands from Silicon Valley is Twitter, and there isn't a day that goes by when we don't see Twitter or its owner, its new owner, Elon Musk, in the news. Musk has slashed the workforce by 3,700, and the platform has reportedly lost half its advertisers. Is Twitter, as some quarters are reporting, facing an existential threat?
Yeah, I think they're certainly facing a threat, but look again at who's behind it. Elon Musk is a disruptor. He's an innovator, but he's also a disruptor. And he's making some conscious changes that are going to hurt employees, hurt the bottom line initially, but one would have to look at what his past track record is. If I look at, you know, Tesla or SpaceX or some of his other companies, it's really hard to argue. The richest man in the world, he's worth what, $200 billion plus or minus. That's pretty hard to argue. It would be like me saying Apple isn't running their business that well, and there's a $2 trillion plus company. We can't be too critical, although some of the things do seem rather foolish. Jumping in that quick and to get rid of that many employees could seem catastrophic. I know if I did that in my business, it would really hurt us. It could put us out of business. So he's doing these things because I think the burn rate of money that they're going through, they just can't sustain. And I think ultimately, if he wants to keep the shareholders happy, and that's who's going to cheer him on at some point when they start to see, hey, they're really making money, they're profitable, they've got a focus, they've got a vision, I think they could turn the company around. I do think it's a good platform. It's got its problems with the bots and the fake profiles and all the other things like all social media does. But cleaning that up and turning it into something that's profitable, I think then it has some sustained power and it will really last. And it may shine like a Tesla or like a SpaceX or one of his other companies.
And when do you expect that to happen, Scott? That kind of turnaround. Of course, there is a political dimension to this as well, as we see every day in the media, with Elon Musk making very controversial statements about Twitter and what it does.
Yeah, I think it's going to take some time. Even though he does things very fast, jumping in, it's going to take time. It's true with any business. And when you have somebody come in, he's almost like the hatchet man, cutting the business in half, getting rid of all the dead weight, trying to clean up things. That causes a lot of ripples. And those ripples sometimes last 6 months, a year, till they start to really focus in on what the core business is and learn how to make profit with it. That's challenging.
Right, and Scott, the other thing, of course, I mean, there is the business side of Twitter, and there's also the content side of Twitter. It's just announced that it will no longer be enforcing its COVID misinformation policy, and according to its own numbers, between January of 2020 and September of 22, the platform suspended more than 11,000 accounts for violating COVID misinformation rules. It removed 100,000 posts that violated those rules. This new policy that it's not going to be enforcing these rules any longer, how significant is that?
I think it's a double-edged sword. Again, it could be challenging, and I think it's got to play out. They're doing a lot of tests, and they're trying a lot of things with community rules and other people commenting on things to fact check and say, hey, this is legitimate and it's fact checked. I think a lot of these things are really, they call them AI algorithms, but there's really people behind it, and they're inputting all this information to respond and trying to make sound decisions. Unfortunately, if you look at a nation that's almost half politically divided, you're going to upset half the people probably. And I think that's what's happening. So they really have to soften some of these things and be careful that they don't make too many changes too quickly, or like every other social media platform, users will jump and it's hard to get them back once they start getting comfortable in the world of Instagram and Facebook, and each person has their couple platforms that they really like, and there's a brand loyalty to it. What he doesn't want to do is tarnish that brand so much with his own ideology that suddenly people jump ship. They're not going to go back. They're going to find the next best social media application.
Liz Miller, as we can hear, there is a very powerful political dimension to what is going on at Twitter. Elon Musk calls himself a free speech absolutist. He's reinstating Twitter accounts, including that of the former president, Donald Trump. And when he announced that, this is how Trump responded. Let's listen.
Truth Social has been very, very powerful, very, very strong. And I'll be staying there. But I hear we're getting a big vote to also go back on Twitter. I don't see it because I don't see any reason for it.
Truth Social, of course, is the platform that Trump himself started. Now, all this has sparked a very fierce debate about freedom of speech, about regulation of social media platforms, etc. What kind of fallout is this going to have on the industry?
It's going to be really interesting to watch because I think there's a big difference between free speech and moderated content. And I think that's kind of the battle that we're facing right now. Free speech as a word is quite a charged topic, certainly here in the States, but really around the world. But when you start to think about these platforms, you also have global regulations, not just here in the States, but quite frankly, across the EU, where platforms have to have some type of guideline and moderated content. You have to be able to show that there are people in charge and they were not just yelling in the town square, so to speak. So I think that, you know, to the earlier point, we're going to have to start seeing some of these changes level out and to see and understand where we start to see that type of speech, where we start to see moderation, where we start to see some of the guide rails, so that we aren't just opening up a can of, to quote Elon Musk, quite frankly, in his first day as Twitter's owner, not to let us all in for a free-for-all hellscape, is what he promised advertisers. But unfortunately, through a lot of the rash decision making that's either been done through Twitter polls, through random tweets, quite frankly, what we're starting to see are the business decisions, advertisers who have actually hit pause on a lot of their spending or have failed to actually commit to any of the upfront spending that Twitter normally has right around this time of year, those commitments for what a brand is going to spend in the year ahead. We haven't seen those materialize. So there's a real business impact here for Twitter, while wanting to have that goal of free speech is a fantastic one. And I don't think there are many people out there that says, no, 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 we don't want that. We want to be able to have people come and share those ideas in an open and safe space. The business end is really quite worried about where are the guide rails? Where's the moderation? Where are the adults in the room who are quite frankly looking at those governance, those regulatory models that as Twitter, as a business, they need to follow to not only be available in app stores, to not only be available within certain regions and certain countries, but quite frankly, to take up that space on someone's phone. People want to know that they're going someplace that they can trust and not see content that, to some people, is not just offensive, but is quite frankly scary.
Anthony Chen, getting back to the business side of the industry, I mean, given the uncertainty and the turbulence that we see in the tech sector, what happens to innovation? I mean, money's become very expensive, and the United States, I think, is pretty unique in one respect, that it has a class of investors known as venture capitalists. But what happens to innovation once that source of money starts drying up?
Well, I think if the source of money dries up, I don't think there's any mystery around that. That hurts innovation. But one of the things that most analysts are not focusing as much on is that if you see these large tech companies releasing workers or laying off workers, that it actually will create opportunities for many startups to be able to hire workers that they couldn't hire before because they couldn't compete with these large mega companies like the Metas of the world or the Twitters of the world. Now all of a sudden there's a surplus of workers out there, and they can actually tap into this. And I don't think anybody would argue with the notion that if there's any group out there that are real disruptors, they're the startups. And if they can actually start to hire some of this talent that was beyond their reach before, I think it will do great things for innovation. So I would not completely view this as a bad thing. And for those that are looking at all these layoffs, nobody likes layoffs, especially during the holidays. They're terrible. But you have to also realize that this comes on the back of massive hiring during the pandemic, when we were all relegated to Zoom and to technology, and we were not doing things out. So now that the world is becoming more normal and the economy is slowing down, you're seeing those forces as causing some job losses. But job losses may be opportunities for other companies that never had access to workers, and that is not a bad thing.
Josh White, I know you've written about this, and what are your thoughts on what Anthony just told us about startups? I mean, the outlook might be very bleak, but does opportunity beckon?
Yeah, no, I would agree. There is a potential silver lining, and to the extent that some of the employees that are laid off, small and medium-sized companies can now attract that talent that they might have once lost to Meta or Google or Amazon. The last recession, the Great Recession, gave us great companies like Airbnb and Uber. So oftentimes you see these tech workers when they're laid off, they have some knowledge of projects, some growth opportunities they were working on. And now that I know my former employer is not working in that space, maybe let's get together and start that company or go work at a startup. But the flip side of that is we do need venture capital to support those efforts. Valuations in the stock market have come way down, and private company valuations are also coming down. They're a little slower because you don't have that same sort of price discovery with stock trading. So to the extent that the capital is there to fund those types of ventures, I do think we could see that positive spillover and the startups, and that's truly small companies are where a lot of the innovation comes in this country.
And Josh, one other development I want to talk about, and that is, social media makes most of its money from advertisers, but they are also a source, a very rich source of data, of people's personal data, which they sell to marketers and retailers. It brings in quite a lot of revenue. I mean, today's data has been, at least data has been called today's gold. What is the future of that?
Yeah, so the data future is somewhat of a tricky area to the extent that Apple recently changed how much data they would share with people that have apps in their marketplace. And so Twitter disclosed in its 10K before Elon Musk bought it out that it was more difficult for them to target advertising because they didn't always have the same amount of data or sort of private user data that they had in previous times. And so for Twitter specifically, it can be challenging because as Musk tries to bring in new advertisers to the platform and tries to get those ads targeted to the best users, that might be challenging if you don't have that private data. The flip side of that is, of course, and Scott can probably speak to this better than anyone, is that private data also comes with cybersecurity risks. Mm-hmm. The SEC, my former employer, has been heavily focused on cybersecurity risks and disclosing that risk and making sure those safe checks are in place. And so that data can be very valuable for companies, but on the other side, they need to make sure they have the protections in place when it has personally identifiable information.
Well, let me go to Scott. Scott, what are your concerns about data security? I mean, you've been writing about this as well. You've been talking about the data leak at Twitter, 5.4 million accounts. The information from those accounts now released.
Yeah, it unfortunately, one would think with all the rules and regulations and scrutiny, the advances in technologies, things would actually be getting better. But I see it actually getting worse with many of these companies. Unfortunately, they could profit so quickly, and it's the ability that companies like Twitter and other big tech companies have, and Facebook, Meta, where they can take third parties on and develop unique APIs to allow them to control some of it and use that data, that rich data, to deliver experiences or in many cases just to target advertising and things. That's getting harder and harder. With the likes of a hardware company, you look at like Apple. Apple doesn't make its money at all by advertising or by collecting and harvesting and selling data to anyone. They try to focus on the best platform and security. So it's a very different comparison, a company like Apple to a Twitter, which is heavily reliable on those advertisers. So if they can't protect that data, they're going to be in trouble. And all of these tech companies, unfortunately, especially in the world of social media, are doing a very poor job. As you dig into the terms and conditions, what all of us opt into when we download any app on our phone, we're giving away everything. We're allowing them to see what we browse, what we're typing into the top URL there, what our contacts are, the geocodes, where we're located, what our likes are and dislikes. We don't realize we're doing it, but we're basically handing that over by basically using the app. And to me, that's really a bad mistake. Probably TikTok is the best example of that. That's causing all kinds of turmoil in the industry, in the world of cybersecurity. And that's a Chinese-owned company, and they've got a great app and a great concept and great AI behind it. But the question is, how secure is it that personal data of all its 1 billion plus users, not very secure?
There's one other aspect of the industry, Scott, which has been causing some concern, and that is, those are the app stores that are run by big corporations like Apple, like Amazon. Is there a case to be made for the regulation of those app stores? I mean, we've seen how Apple and Amazon use that power to literally ban there were platforms like Gab and Parler, which appeal to conservatives, but it took them out of the store.
Yeah, unfortunately, there's probably not enough regulation there. I'm never one to propose more regulation, but in certain cases, it's probably needed because there you've got two Goliath companies that they can even push Twitter away and many other companies away where you can't find those apps on the store. And they also have a lot of revenue share models in place. So if you look at some of those Goliaths, the Googles, the Apples, and others, they could easily say no to somebody, and that could put them in financial peril overnight. And that's what's so scary. So I do think there needs to be some regulation and a little bit more balance and fairness, because if you look at who gets the majority of the proceeds from an app that's purchased, obviously it's going to be the Apple, it's going to be Google or whatever. It's not balanced enough, unfortunately.
Liz Miller, looking at all these changing circumstances and all these changes that are taking place in the economic environment, how has that affected the work culture in Silicon Valley? I mean, we saw during COVID how so many people were working from home. Is that the norm now? Is that going to be our future?
The new normal is still being written, to be very honest. We're starting to see some organizations have mandates where people need to come back to work. I think, again, we've been talking about Twitter, and Elon Musk has not only told people they need to come back to the building there, he's actually starting to reorganize Twitter's floor layout. He wants all the engineers on the 10th floor in kind of dense and high intensity work environments because he feels that's actually going to foster some of that innovation with strike teams being together and working together in those close quarters. But you have some workers that really don't care to sit on the highway for over an hour trying to commute in and out of work. Right. Being able to work from home and still being highly productive has really reshaped how people are thinking about their work style and their workspace. So I think what we're seeing in the Silicon Valley, and it's really rippling across many work environments really across the country, but I'm also hearing things from around the world where organizations are looking to create hybrid models where the business's needs and the goals are certainly kept at the forefront of how to create those robust, profitable organizations that are highly effective and have those high-performing teams, while also really being able to address how individual work styles and individual workplaces really come into play. I think for a lot of organizations, they've realized once we got over that first challenge, we really were able to kind of craft these hybrid organizations, and that's what we're starting to see come to life.
Okay, Anthony Chan, I've only got 30 seconds, but one final thought, and that is some analysts are talking about what's called a white-collar recession. What is that?
Well, you are, in fact, seeing that the rank-and-file employees are really needed to run the businesses. But in a recession, you're going to have to increase productivity. Productivity has been really the Achilles heel of the U.S. economy. And so to do that, and become more efficient, you're going to try to cut some of the fat from the white collar sector or that part of the labor market. So that is the reason why you're seeing it. And by the way, that is likely to continue.
Okay, and that's where we have to leave it. Thank you to all of you for being with us. That is it for this edition of The Heat. I'm Anand Naidu in Washington, D.C. Thank you for watching.
The nature of business is to bring value. Business activities in Europe, Asia, and the U.S. reach consumers globally.